Hey there, Dallas Fort Worth. We are closing out the month of October, and it is time to talk Dallas housing market numbers. First, we'll start with mortgage rates. And yeah, this one kind of stings. Mortgage rates have gone up so much that we're flirting with that 7% number again. Yuck. And with that information, it's no surprise we've seen a decrease in mortgage applications. They're down 6.7% week over week. And as far as how we compare to this same time last year, we are just 3% higher in applications. But a year ago, rates were about 7.64%. So almost 75 basis points higher, but we're only seeing a slight uptick in demand this year. So when can we expect some interest rate relief? Well, we're going to have to see how the reports shake out this week. We've got the PCE reports coming out. And if this can stay at or even better below the last report that showed a 2.2% increase from 1 year ago, then maybe we can see some softening in the mortgage market. And this will also depend on what employment reports say on Friday. And according to the CME Group's FedWatch tool, it's showing a strong likelihood that we'll see a 25 basis point drop in the federal funds rate for the November 7th Fed meeting. And it's currently projecting a 98.3% chance we'll see that drop. But remember, the mortgage markets price these drops in advance. So the likelihood that rates go down because of this, well, is not very likely. What's more likely is that rates will adjust to the economic reports that are released around this time. So how is all of this affecting our local market? Well, let's take a look at sales data from our entire MLS. The median sales price is flat from where it was this same time last year, and it's at $370,000. But that is a 7.5% drop from our pricing peak of $400,000 that we hit in May and June of 2022. New listings dropped to 14,143 homes, and we're up 9% from last year. It's no surprise that we are seeing a downward trend of this number since it's a very typical seasonal pattern. The overall number of homes for sale went down for the first time this year, and we currently have an inventory of 42,331 homes for sale. That is a big jump from where we were this time last year. In fact, it's an increase of 28.3%. But what I find interesting is that we are seeing this is extremely close to our inventory levels that we had from June through October of 2019. And by the way, those were our highest inventory levels on record for our MLS. And this conflicts with so many news reports we're hearing right now that say we have limited inventory and we have a housing shortage. And I'm actually working on another video right now discussing a recent report that came out from a company called Maxwell. They're a technology company for mortgage providers, and they produce some incredible reports. And they recently published one about sideline home buyers. And I'm going to go into a lot more detail about this paradox of having homes and homes everywhere for sale, but not a house to buy, and how this is setting buyers up for big disappointments. Because what you have right now is a tough situation for sellers who are in the market with few buyers, but tons of competition. But no one is talking about all of this competition, so their prices are still aggressively high. Buyers, if I could get you to see what a sweet spot this is for you right now, because right now, sellers who have been on the market for a month are starting to get nervous. We're hitting the end of the year, and the market naturally slows down anyway. And every seller lists their home because they want to sell, not because they just want it to sit on the market and they want to keep their home in pristine condition 24/7 on the off chance someone might schedule a showing. No, they want to sell their house. And buyers, a ton of sellers who haven't sold right away are willing to negotiate. Now, there is a bit of an art form to it. You can't just offer 20% off the asking price and see who's going to bite. But there are so many ways to work a contract and financing in your favor right now. And there's no telling how long it's going to stay like this, because as you'll learn in that sideline homebuyer report, there is a magic number that most sideline homebuyers feel rates need to get to in order for them to get back into the market. And can you remember back in time with me for a minute when we had a flood of buyers in the market and there was fierce competition for the limited listings available? That was a miserable time for a lot of buyers, and I promise you do not want to be that buyer. And I'll give you a little bit of a behind-the-scenes look at life as a real estate agent. See, in our office, we have meetings where we discuss the real estate market. We talk about buyer sentiment. We talk about seller sentiment. And it's helpful for all of us because we know we aren't tone deaf to what's going on more broadly. And what we're hearing is that people are waiting. And the big reason they're waiting is because of interest rates. Now, I haven't found a number of precise precisely how many people are waiting, but I have found some educated guesses on what that is on a national scale. The National Association of Realtors predicts we will see 4.92 million sales in 25. We're currently tracking to have an annual rate of 3.84 million home sales for this year. Now, that's a single year projected increase of 32%. A million more buyers in the market is a lot. And this same report is also predicting prices will go up next year. So what is the future cost of your current decision? And we can see in our local data for closed sales that they're down from this time last year. We've had a 1.4% year-over-year drop, and for our entire MLS, we had 8,799 sales. We now have 4.6 months of inventory, and it's no surprise we've seen this number go up based on the inventory levels and low demand. We even have more months of supply than the summer of 2019. We have to go back 21 years to April of 2003 to get a market that had supply levels this high. The time it takes for a home to go under contract is at a median of 37 days, and that is up 42.3% from this time last year. Our median sales price per square foot for DFW decreased to $190 a square foot, and that is flat when compared to the same time last year. Now, the amount homes are selling for as a percentage of the original asking price has dropped to 96.1%. So this means sellers are taking off 3.9% from their original list price of their home to get it sold. So if you listed your home for $400,000, you're probably going to sell somewhere close to around $384,400. So those are your numbers. If you want to see what these numbers look like real time with a click of a button and get real-time reports on Dallas as a whole, or maybe you want to focus on a particular submarket, we can set up a custom dashboard for you. Just go to dashboard.dfwmarketupdate.com, tell us the area or areas you want reports on, and bonus, we'll send you quarterly sales report for sales on homes just like yours in your neighborhood if you want to get those. And those show actual sales numbers and time on market, not just the last list price before it's sold. And of course, if you are looking to buy or sell a home in the DFW area, my team and I would love to serve you. Just reach out by phone or text to 214-803-4444 or start with an email to me at jshannon@kw.com. We can't wait to hear from you. Thanks so much for watching this video, and be sure to check out another one on this channel.